Hi guys, this is a follow-up with the Euro USD. So we are on the daily chart. We have everything like the Fibonacci retracement, the 50, 100, and 200 exponential moving average, and the histogram. So how you can see right here, the market drop and make like a beautiful reverse bar. So how we know that this rebound for this strong support double top that we have right here, that will be the last move to the downside. We don't know yet. So we go to an hourly chart and we're going to check right here what the market is doing. Very simple. So the market was bouncing up and down, and this line right here, which is a Fibonacci support, and at the end of yesterday, on the morning yesterday, the market break down and continue to the downside until you found this support, that this line come from the Fibonacci and the double top. You see the reverse bar right here. What is a reverse bar? Very simple. A very new low and closing high. This bar right here is a hammer, meaning it looks like a hammer. You see this whip here empty, and the whole close, the whole value of the bar was on the top. And after that, the market continued going up and up. Like we was talking in yesterday's video about emotion, a lot of people jump on the market right here, thinking the market is going to continue going up. And this is no confirmation yet that this swing down is already at the end. How you know that this will be the last movement to the downside? That's very simple. We need an ABC correction, and that structure should be created in this area right here. So the market should be going down again, and probably is going to retouch this line, this Fibonacci support. And from there, it's going to move up. What will be your best play around this price range right here? So you're going to wait until the market go down this way, or you can short the euro from that price down, because you know it's a high probability that the market is going to come down until this area. And from here, we will know if it's going to continue down or it's going to rebound to the upside or resume to the upside. So if you're going to do that, your stop loss will be in this area, and you short the market at this price, and you take profit will be around this price. So if you're going to do that, how much money you can make out of that movement right there? Very simple. You click on sell, and then with this window, they're going to pop right here. You're going to create this order. So how you leverage your order? Very simple. You create a limit order, because you're going to buy at some price that you're going to establish. Let's say that we're going to buy around the price where the price is right now, $1.1261. So we're going to put the stop loss. How much stop loss are we going to create? Let's put the stop loss around this number. So 1293. So let's start to say 25 p. Sorry, 20 p. Let's go with 20 p first. So in 20 p, we're risking using 20,000 unit. And what do you mean by 20,000 unit? That's very simple. For every pip that the market move, you lose or you win $20. So if you put just 1,000, let's do it right here. If you do just 1,000 unit, meaning for every P that is, I'm sorry, 1,000 for every P of the market is $1. You can see right here, that's the cost of the P, $1. So how much money you're going to use from your account as a margin will be 22 bucks. So that will be with 10,000. So if you use 10,000, that's how much money you use from your account. What do you mean by that? Let's say that you have an $100 account. That money, it will be on hold until you finish this order. If you make, let's say you make 10 bucks, so now you put it back to your account, 32 bucks. That's how it goes. So right now, let's say that we're going to put the take profit. We made stop loss 20 pip. So the stop loss will be around this price right here. So it's fine because it's above the Fibonacci. That is not the position. The correct position for the stop loss will be right here, but it will be too much. So if you say that we're going to put the stop loss up there, will be 25 pips. No, we need more than that. So let's say we do 35 right there, and we are right there. So if we do 10,000 with 35p, we risk, I'm sorry, 1,000, no, 10,000, we risk $35. So if you have an $100 account, 2% of the month. But let's say that we have $1,000 account and we're going to put right here, let's go with 20,000. So we're risking $70 and we're going to make a take profit. Let's say the take profit will be, we're risking 35. Let's put 100. No, let's put 55. So the risk 70 plus 122. No, it's no, at least you have to make 2 to 1. So let's say that you put right there 80 pips, so 160. That's what we are right now. So your target will be 80 pips. So in 80 pips, your target will be down here, like how you can see right here. So it has to go down and break the low. It's a good target. It could happen. So, but you have to be, if for this type of target, you have to be watching the trade, because you don't know if it hit this price and the price rebound from here. So if you want to do a secure trade, you have to put your take profit around this price. So how much that will be? Let's say my take profit, I want my take profit right here at this level, which is 12.19. So you write down $1, 12.19. Okay, so now you want to make money out of that because you come from 12.61 to 12.19. So how you leverage this to make the right amount of money? Okay, so that it will be this changing the leverage. So let's go and put 100,000. If you do 100,000 and you take profit, it will be, let's put 50 bit. That will be around this number. We can move it later on. So with 50 bit and 100,000, you will be used from your account. This is $10 for every pip that the market move. And you need the margin is going to use from your account 225, like I explained before. This means that the market going to use as a whole $225 from your account in order to you elaborate this type of the order. So that's how it goes. So if you lose, if the stop loss come against you, you're going to lose 350. If the stop loss go in your favor, if the order go in your favor, you will make 500. Still, the risk of reward is still too high for what I like. So my recommendation right here is you have to wait until the price come around here to create this order right there, or you put less leverage, or you use a small stop loss. So you can use the stop loss right above the Fibonacci. That's something you can do too. It's a little more risky, but it is something you can do. So let's put that we risk 20 pips, and you are right there. So you're risking $200 to make 500. That's decent. But this type of order that I would like to do risk just 100 for 500. That will be phenomenal. So that's something you can move your stop loss later on. That soon the market flip to the downside. But you don't know. You're risking 200 to make 500. It's not bad, but it's not perfect. 100 to 200 is perfect. 50 will be better. So how you create that order like that, you have to wait until the price go all the way up right here, around this price right here, retouch the Fibonacci, and then you short the market. You short the market. So that's how it goes. So it's very simple. It's nothing crazy. So that's how you create the order. So right here, you just click sell, and the order is being created. You can move the order. Your stop loss, you can spread it right here and bring it down right here. something that a lot of people does, and I now recommend, if you put your stop loss there, don't move your stop loss. If it hit you, just wait until the market reset himself and create another setting, and then you create a new order. Don't move your stop loss. A lot of people drag the order because they do this. The market going against them, and they move it, and they move it, and they move it, and they move it. Then as soon as you know, you're losing 600 baht if the market continue going up. Okay, so that's very important. So the goal right here is to bring your stop loss as close as possible to your order. As soon you are able to bring your stop loss on top of your order, it's a free trade. And from that moment on, you're starting to bring it forward and forward and forward and forward. So now, how I know that my order is in the right position? So how I would like to try to make this order more safe? I'm going to secure my target right on the head of this reverse bar. So I still making 447. This is a good morning. So now I go down to 15 minutes. I'm looking for the order right here, and everything is looking good. So the market should starting to come down. You don't show the market is trend to the upside until now. You see the market drop, create this lateral ABC. It was not a consistent ABC right here, so we have now that shape formation right there. This is the first move. The market should go down to create the A, B, and C. The same I explained to you guys yesterday in another video. Right here, if the price stay below B, and in this case right here, this was B right here from A, B, and C. All the time the price was on the B, it's still bearish. Same right here. If the price still on the B, so A, B is creating C now, the price is on this point, the market still bearish. That's why the best position for this stop loss is above this price, which is above B. So I hope you guys understand my explanation with this video, and I see you in the next.